The stage is now set for the introduction of the Goods and Services Tax Bill in the Rajya Sabha, or the upper house of Indian Parliament. Both the ruling BJP and the opposition Congress party have issued whips asking all their members to be present in the House when the bill is taken up for consideration and passing. The move comes 25 years after India liberalized its economy, unleashing a wave of reforms. Today, it seeks to effect another major reform, this time in taxation, which seeks to convert the whole of India into one single economic unit. What the GST bill proposes to do is to subsume all the various indirect taxes levied by the federal government and the various provinces into one nationwide tax, to be levied at the time a consumer buys a good or service, as opposed to the current practice of levying it at the time of its manufacture. The GST bill aims to reduce paperwork, reduce the scope of corruption, and to increase the efficiency and transparency and the ease of doing business. Now, to give you some context here, the GST bill was introduced in the Lok Sabha, or the lower house of Indian Parliament, by the Finance Minister Arun Jaitley in December of 2014. The Lok Sabha passed the bill in May last year, and now the government proposes to introduce it in the Rajya Sabha. Now, the government sees a very small window of opportunity for it to push the legislation, because in a few months' time, some key provinces will go to polls, thereby further reducing the possibility of a compromise between the ruling BJP and the opposition Congress party. For its part, the Congress party has indicated its support for the bill, provided the centre agrees to reconsider some of the provisions of the bill. For now, all eyes are on the Rajya Sabha, because on it will depend whether Prime Minister Narendra Modi's government will be able to pull India out of policy paralysis and put it firmly on a trajectory of higher economic growth. One point that is not appreciated enough is the fact that the GST bill is likely to curb the use of black money. Now, for instance, to give you some context, when the GST was introduced in New Zealand way back in 1986, it yielded 45% higher returns or revenues only because of higher compliances. The same can be expected in India once the GST comes into effect, possibly by April 1 next year. Ramesh Ramachandran, WION, New Delhi.